have never had any experience in the tax bench or tax litigation. Towards the end of July 21, I was informed by the Honorable the Chief Justice that from August 1st, 2021, I would be heading the tax bench, the direct tax bench. And it was my first stint also of heading a bench on regular basis and first time in the tax roster. It was quite a challenge. And I grabbed the opportunity to learn a new subject. It was not very difficult in the sense, first of all, I have enjoyed that subject while dealing with my own chartered accountants, the family chartered accountants, and also with my commerce background. It was not, and my commercial and accounting background, I did not feel daunted by the task reposed upon me. I was not a total stranger to the basics of tax law, but the tax litigation was absolutely new to me. I was very eager to learn the subject and know the nuances of tax law. I have always enjoyed commercial law, particularly to the field of law in which I predominantly had practiced. Admiralty law, arbitration, international trade law. Even as a judge sitting singly, I was predominantly on the original side working in the commercial division. And this, ladies and gentlemen, helped me grasp rather briskly various legal issues under the Income Tax Act. I applied my commercial tax experience to tax law and just did what was required to be done. I would say the 9 months I spent on the direct tax bench was the finest moments I had as a judge. In my 10 years, these 9 months were like a cream, on the icing on the cream. And I enjoyed it to the hilt, and the credit for that goes to the tax bar. They were top class. I mean, a judge's work and the judgments are only as good, I would say, as the lawyers are. A judge, though technically is expected to know everything, it's just impossible for a judge to know everything. And there are so many nuances and so many different laws in this country that a court always looks to the lawyer for support. Of course, the lawyers will argue and go away, and then the work of a judge starts. But for me, it starts right the moment the work starts. Your mind starts moving quickly, and which helped us dictate judgments as soon as the matter got over. My taking over the direct tax assignment coincided with two, if I may say so, turning points in income tax litigation. One, the assessment orders were passed for the first time by faceless assessing officers under completely new provisions of law. This led to a spate of writ petitions being filed directly challenging the assessment orders, which I'm told was not so much the case earlier, that is before the faceless regime. And secondly was several notices issued under Section 148 after 31st March 21 under the old regime came to be challenged by way of writ petitions. Apart from these two, several writ petitions challenging order disposing objections under the old reassessment regime came to be filed. Reopening of assessment beyond 4 years and responsibility to disclose primary facts. When I started dealing with the writ petitions challenging notice under Section 148, the opening statements by the councils used to be that reopening is beyond 4 years or within 4 years. Of course, if reopening was beyond 4 years, the first proviso kicked in, which was an additional defense against reopening. I did so much of 148 matters that there was a joke that the moment the 148 matter gets called out, the lawyers would say it's gone on autopilot mode. There are so many matters of 148. It was real. It was more of a repetitive nature. It was happening. My detailed consideration of law on opening beyond 4 years, which had formed the basis for my subsequent decision was in the case of Ananta Landmark Private Limited versus Deputy CIT. Here, I think, if I recollect correctly, Mr. Pardiwala had appeared, and I would compliment him, that which helped us put all cases which were spread over under this one umbrella of Ananta Landmark. So it was more like a ready reckoner. You need to look into Ananta Landmark, you know what many of the judgments have held. So this was a case where the assessee was a real estate developer, and the assessment under 143(3) of the Act, allowing deduction claimed against interest income under Section 57 of the Act, was given. The assessment was reopened on the ground that the interest paid on the loans is allowable under Section 37(1) of the Act. Since there was no business income during the year, the entire interest should have been capitalized to the work in progress as against claiming as deduction under 57, which according to the AO was not an allowable deduction. Against the rejection of objection, assessee approached us, and we allowed the petition, holding that there was neither an omission nor failure on the part of the assessee to disclose material facts necessary for assessment, and the reassessment notice was held to be bad in law, because this was beyond 4 years that the proviso always applied. After Ananta in Ashraf Alibai Nathani versus ACIT, it was held that oversight cannot be rectified by reopening. The position of law was made categorically clear that once the primary facts are before the assessing authority, he requires no further assistance by way of disclosure. It is for him to decide what inference of facts can be reasonably drawn and what legal inference ultimately to be drawn. It is not for somebody else to tell the assessing authority the inferences, whether of facts or law, that should be drawn. Even for a moment, it is accepted that the assessing officer had missed to take note of the law that was laid down by the Honorable High Court of Punjab and Haryana in Sumit Taneja. Still, that cannot be a reason to take recourse to reopen to remedy the error resulting from this oversight. The court held primarily that duty of disclosing primary facts relevant to the decision of the question before the assessing authority lies on the assessee. But the duty does not extend beyond the full and true disclosure of all primary facts. Once the primary facts are before the assessing authority, he requires no further assistance by way of disclosure. It is for him to decide, go through the papers and draw whatever inference that can be reasonably drawn. It is not for somebody else to tell the assessing authority the inferences that he should draw. Even for the court relied on Calcutta Discount Company Limited versus ITU and also Gemini Leather Stores versus ITU, both of the Supreme Court. Calcutta Discount, if you all would know, is of 1961. It's one of those most beautifully written judgments which everyone should have it next to them when they're doing a tax matter. Then the second issue that came to be, which was found in a lot of reopening, was on the basis of different opinion of law suggested by the audit department. In fact, audit objections and recorded reasons were similarly worded. It clearly amounted to change of opinion. We in fact saw many cases where the audit department would have raised an objection and the assessing officer would have replied to the audit department that what you're doing is wrong and what we have said is correct. Even when the reopening was recommended, again that officer would have written, but still, because to fear of having the audit sitting over their head, they were issuing the notice. So the audit objections and the reasons recorded were similarly worded. So in GlaxoSmithKline Pharmaceuticals Limited was ACIT. I'm not giving the citation, I'm only giving the name, please. Allowing the petition, we held that where reopening is done beyond 4 years, merely relying on audit objections, it will amount to change of opinion. The basis for reopening assessment in that case was mere reliance on the audit objections before the assessing officer. There was no failure on the part of the SSE to truly and fully disclose facts. It cannot be said that here the assessing officer could have had reasons to believe that income escaped assessment. Of course, the reassessment was quashed. There were several reopening done beyond 4 years, simply relying on some information received from investigation wing without any live link between the information and income escaping assessment. Which was like they borrowed satisfaction. So in Reynolds Shirting Limited versus ACIT, it was held that such reopening cannot be sustained. In that case, the SSE had filed its return of income, which was accepted, and an assessment was completed. The notice was issued for reopening, and in the reasons recorded for reopening, it was merely stated that information received from director investigation about certain entity entering into suspicious transactions and material was not further linked by any reason to come to conclusion that SSE had indulged in any activity which could give rise to reason to believe on part of assessing officer that income of SSE chargeable to tax had escaped assessment. Court held that this was a fishing inquiry and not a reasonable belief that income chargeable to tax had escaped assessment. Then the next issue was, which was quite prevalent, was borrowed satisfaction and violation of principles of natural justice. In Patel Engineering, it was held that documents or a report relied upon must be furnished along with recorded reasons. It was also held that principles of natural justice was violated as judgments were relied upon without bringing them to notice of the SSE and giving the SSE an opportunity to distinguish or deal with those judgments. What was happening in most of the matters, we found that after the objections were heard and the personal hearing was granted, while disposing the objections, the assessing officer would rely on a plethora of judgments. Many a times it made no sense because they were not even relevant to the facts of the case. But at the same time, he has the liberty, nobody can stop him from relying on those judgments, but he should have, in fairness, given an opportunity to the representative of the SSE to, that these are the judgments which I feel are against you. What do you have to say? You deal with it or distinguish. That is what principles of natural justice requires. A personal hearing would make no sense otherwise, because he would simply write whatever he wants to just to dismiss your objections. So we held that even many a times the information that were being received were not being furnished, because then how do you deal with those information? At least to even tell him, hey, what you got is totally wrong. I have nothing to do with it. So we observed that the DDIT should have given copies of those objections or reports, and relying on information that DDIT had received was borrowed satisfaction. It is not the case where the SSE had, the IAO had a reason to believe personally. Then recording of failure to disclose. Though law is well settled that reopening beyond 4 years require department to show failure on the part of SSE to fully disclose material facts, the recorded reasons, if I may say, never would make out the case specifically. In many cases, there was no recording of such failure also. And in Vodafone versus India Limited versus ACIT, there was not even a whisper of what was not disclosed. So the court held it was bad in law. There the court held that to meet a possible contention that when some account books or other evidence has been produced, there is no duty on the SSE to disclose further facts, which on due diligence the ITO might have discovered. The legislature introduced the explanation to section 147. The duty, however, again saying that Calcutta discount would apply, did not extend beyond the full and truthful disclosure of all primary facts. Once all the primary facts are before the assessing authority, he requires no further assistance. And then at the same, what inference he would draw, we were holding. So the court concluded that while the entire basis for proposing to reopening was on the documents and submissions which were available before the AO, before passing the original assessment order. So there was not even a whisper as to what was not disclosed. Then we had to take a call on another interesting issue as to whether consideration of tax audit report during original assessment proceedings would prevent reopening beyond 4 years. In Akron Developers Private Limited versus Deputy CIT, the assessing officer issued the notice under section 148 relying upon facts and figures available in audited account and tax audit report, which were already filed along with return during original assessment. Then what was not disclosed? We couldn't make out. So we held that therefore reopening was based on facts and figures in accounts and tax audit report, which was on report. There was no new tangible material and reopening was bad in law. Then in Eland Apparel Limited versus ACIT, disclosure in tax audit report was considered relevant. Everybody would be aware of the Form 3 CD of tax audit report, which was mandatory to be filed. And in Form 3 CD, the SSE had mentioned that the deduction of on account of interest and tax liability was claimed under Section 43B of the Act, based on the case law in CIT versus Diaz Electricals. Assessment order was completed under 143.3 of the Act. There was no discussion in the assessment order. The assessment notice was issued after the expiry of 4 years on the ground that the claim was incorrect, which was discovered subsequent to the original assessment. Hence, there is no change of opinion. Allowing the petition, court held that the SSE has disclosed in the Form 3 CD, which is mandatory obligation to furnish with its return of income, the report of auditor which was fulfilled by the SSE. The notice was quashed. In fact, there were many matters where we, despite courts, our court, Bombay High Court, also holding that even if there is no discussion in the assessment order, the fact that a query was raised and the answer was given to the query means the assessing officer was satisfied that there was no problem, should itself be enough. There need not be a specific discussion. Then in the, even where suddenly in many cases what we observed is that the order disposing objection ran into more than 50 pages. And more than 50 cases, irrespective of whether they applied to the facts of the case or not, was relied upon by the department. Also, in most cases, a standard defense of the department was that the assessment order does not have any discussion. So in High-Tech Corporation Limited, it was held that it is not necessary that the assessment order should contain reference or discussion in the discussion. It was observed that the order of disposal of objection ran into 21 pages and referring 68 case laws without referring the issue under consideration. A faceless assessing officer had only, we observed that he had only wasted his time in writing unsustainable order on objections. In that case, the assessment of petitioner had been completed under 143.3. In the course of assessment proceedings, as I said earlier, specific question was raised as regards taxability of the subsidy and provision for expenses. After considering the reply, the assessing officer had accepted the contention of petitioner and partly disallowed the provision for expenses. Against the order of the assessing officer, petitioner had preferred an appeal before the CIT, which was pending. After the expiry of 4 years, the assessing officer issued notice for reassessment and in the recorded reasons, AO proposed to make addition as regards the subsidy and provision for expenses, which was in which, as said earlier, a query had been raised. The petitioner filed detailed objections. The objections were rejected without any discussion on the contentions of petitioner. In the rejection order, the AO quoted 68 case laws, which was, I think, was a record. And allowing the petition, court held that it is not necessary that the assessment order should contain reference or discussion in the, that the order of disposal ran into so many pages and the faceless assessing officer had only wasted his time. In Nitin Kumar versus JCIT, it was held objections must be passed by a speaking order. Objections must be disposed by a speaking order. The ITO had rejected the objections filed by the SSE. Allowing the petition, court held the order rejecting the objections raised by the SSE against reopening of the assessment under section 147 was in violation of the principles laid down in the case of Tata Capital Financial Services Limited versus ACIT. The assessing officer had to consider each and every objection raised by the SSE against reopening of the assessment and record reasons for his conclusions. The various objections raised by the SSE, we held, are required to be answered by sufficient and cogent reasons. When I said we held, it means the court held. Strictures and suggestions. We had to, with a heavy heart, do in some matters. This was not that we had anything against any officer or the department or anybody, but it started giving us a feeling that the way orders were being passed, the way matter was being handled, perhaps they felt that they are not accountable to anybody, they could do anything they want. That was a feeling, and which was unfortunate, because absolutely blatantly unacceptable orders were being passed. So in Nirmal Bank Securities Private Limited versus ACIT Bombay, court recorded its displeasure with regard to the manner in which reasons were recorded and approvals were granted. Many of those approvals under 151, we could make out the principal commissioner or the person giving the approval would not have even read the objection, the reasons recorded. It was quite obvious. It was observed that the AO will record better reasons for reopening, and the authority granting approval will also apply their mind sincerely before granting approval. In that case, the assessment was completed under 143.3, asking for various details. Thereafter, assessment was reopened on the ground that a large cash transaction was received. Upon consideration of submissions, no addition was made. Assessment once again was reopened after expiry of 4 years. The reasons supplied, it was recorded that on the basis of search information with regard to accommodation entry, STR, etc., in which assessee is the beneficiary. A detailed objection was filed. The order disposing the objections was passed. Against the disposal, a writ was filed. While disposing while allowing the petition, court held that the recorded reasons does not even indicate what address was searched, from whom such information was received, what was the information, etc. The court observed that reasons recorded does not indicate anywhere or by any stretch of imagination can it be held that income has escaped assessment. It was also held that there was non-application of mind by the sanctioning authority, and court also had to observe that the assessing officers could record better reasons for reopening, and the authority granting the approval will also apply their mind sincerely before granting approval. And the reassessment, the least they could do is if there read the objections, reasons for reopening, and if it didn't make sense, the sanctioning authority could send it back It's not just that it goes straight to the principal commissioner in cases, it goes to another officer who checks. And then it goes to the principal commissioner. Nobody reads. That was the problem we found was happening. In Tata Capital Financial Services Limited versus ACIT, we in fact directed CBDT to issue guidelines to its officers based on the order with clear instructions which are to be strictly followed. Court, among other things, directed the revenue to adhere to certain guidelines to be followed for reassessment. And we will just read out what were the guidelines. And they are, while communicating the reasons for reopening the assessment, a copy of the standard form request sent by the AO for obtaining approval of the superior officers should itself be provided to the assessee. This would contain comment or endorsement of the superior officer with his name, designation, and date. There were so many cases where who was a superior officer, when was a sanction given, nothing was available. The assessing officer shall not merely state the reasons in the letter addressed to the assessee. What was happening in many of the notices issued, they would reproduce from the reasons recorded what it is, instead of giving a copy of the reasons to believe itself, as if it was a national secret. And there were cases where there was not they were not even matching. There were contradictions. What was said there and what was supplied. So we had to give these directions. If the reasons refer to any other document or a letter or a report, such document or letter or report should be enclosed to the reasons. Such portions that does not bear reference to the assessee concerned could be redacted. There could be some cases where the detail received would not apply or relate to the assessee, or there could be certain things which still form part of the investigation, and the department may want not to disclose all that to the assessee lest the investigation is impaired. Those portions can be redacted. Then the order disposing of the objection should deal with each objection and give proper reasons for the conclusion. Personal hearing should be given, and minimum 7 working days advance notice of such personal hearing shall be granted. We saw many cases where overnight the assessee is told to attend the personal hearing. There have been cases where even for reply to the reopening of assessment, less than 24 hours notice was given. And if the assessing officer, we also said that if the assessing officer is going to rely on any judgment or order of any tribunal or court reference, citation of those judgments or orders shall also be provided along with the notice for personal hearing, so that during the personal hearing, the assessee will be able to deal with it or distinguish those judgments. And we directed a copy of the order to be placed before the CBDT to issue guidelines to all its officers based on that. I'm informed that even under the new reassessment regime, this decision is being relied upon, but the directions, it seems, are not being implemented. People should understand, not take this as something as a reprimand to the department. It is a win-win situation for both the assessee as well as the department. Because if the department does not follow the basic requirements of what is principles of natural justice, the assessee comes to the court and those reopening, all those orders are quashed and set aside. It's the department, the revenue, that suffers. So therefore, the revenue should also make an effort to pass such orders which will not be interfered with by court, than say, oh, court is interfering in every matter. But then you must apply your mind, accept. So it's not that we are finding fault with anybody, whether with the assessee or the department. We are just going on the basis of law, the principles of natural justice, and how it should be applied. If only these checks and measures are kept in mind while issuing a reopening notice, many court may not even interfere. The assessee will have to comply with it. In Sharwa Multi-Trade Private Limited, the ITO reasons recorded stated that assessee gave accommodation entry to itself. We had directed CBDT to formulate a scheme to train its officers. How can someone give accommodation entry to itself? That itself shows total non-application. The assessing officer reason to believe had not applied his mind. The sanctioning authority, if he had read only the reasons, he would have certainly told, how can someone make an accommodation entry to itself? So the court interfered there, that where the recorded reason suggested that the assessee received bogus accommodation entries from itself, it was a clear case of non-application of mind in forming the recorded reasons for reopening. High Court had suggested that the CBDT should formulate a scheme to train officers for applying their mind in recording the reasons. And CBDT should always also advise the concerned commissioners not to grant approval under 151 in a mechanical manner. That was what was happening. Otherwise, why would the senior officer not point out that the error in the reasons for recording? For reopening. In Great Eastern Shipping Company Limited versus KC Naredi, it was held where the jurisdictional issue is involved, the same must be strictly complied with by the authority concerned, and no question of knowledge being attributed on the basis of implication can arise. We also did not appreciate the stand of the SS Revenue that the respondent and assessee had asked for the recorded reasons only once, and therefore seeking to justify non-furnishing of reasons. He need not have even asked. The recorded reason should have been furnished, but the officer says he asked only once, and therefore we did not supply. Then against the assessee, we did hold, there were many matters against the assessee. We rejected many writ petitions, did not interfere. It is very important for the professionals, pardon me for saying this, I'm sure you all would take the right steps, but this is just coming from me, which we feel is required, that to advise their clients based on facts and merits involved, whether a writ petition should be filed. We could see in many cases, it was just trying to, let's take a chance. If you get it good, if you don't good, we'll go back to the department. So what was happening was, there were cases where the facts were so tilted against the assessee. You must realize that any observation that we would make while rejecting the petition could be used against the assessee. So therefore, we'll have to be very careful and circumspect before we even approach the court by filing a writ petition. In Shrikant Fulchand Bakkad versus JCIT, it was held that a reopening was valid and the transactions entered into by the assessee were not genuine and were carried out with a view to avoid paying tax. Held that the issue under consideration had not been examined by the assessing officer while passing the assessment order. The transactions entered into by the assessee were non-genuine and were carried out with a view to avoid paying tax. The assessee had set off the loss incurred from futures and options trading against profits booked from normal business activity. This was a textbook case of tax avoidance, and the notice of reassessment was held to be valid. In fact, in many cases, when the lawyers would feel that the court may not be inclined, they were quite bold enough, or they would come forward to withdraw the petitions with liberty to approach the officer. So that many times helped the assessee also. And in Pharmacia Molio versus ITO, where there were cash deposits and assessee had not filed a return of income, reopening was held to be valid. The court held in that case that the objections raised by the assessee were considered by the assessing officer and the principal commissioner for determining whether any prima facie case was made out to reopen the assessment. And in Yogini Bipin Soneta versus ITO Bombay, reassessment notice was issued for verifying the exemption claimed in respect of penny stock on the basis of information received. The objection of the assessee was rejected by the assessing officer. Dismissing the petition, court held that the assessee has not offered the short-term capital gains and hence the reassessment notice was held to be valid. In Tata Communications Transformation Services versus ACIT, this was the matter where after the amendment, 148A was introduced, but the authorities followed the old procedure before pre-amendment. And where I was heading the bench with, I think, Justice Jamadar or Justice Borkar, I think it was Justice Jamadar. And we agreed with the views expressed by the Allahabad High Court, Rajasthan High Court, Delhi High Court, and Madras High Court, and further held that there was no savings clause for applicability of erstwhile sections 147 to 151 of the Act, and the explanations under the impugned notification did not cover section 147 of the Act. Therefore, the procedure under section 148A of the Act should be followed, and the Relaxation Act, or TOLA, as many say, does not operate for the assessment year 2015-16 and subsequent years. The notice issued under 148 of the Act was quashed. I should say it will, in that one petition, 1,400 petitions, it was a group of 1,400 petitions that came to be disposed. And following that, further 300 plus petitions came to be disposed. And what a hearing it was. The entire tax bar was there. And what support we gave, it was really, it was one of those unforgettable moments in the life of any judge, that such a classic hearing took place. And I was privileged to be heading that bench, and I felt really happy that I could write the judgment. And this was also followed by many court. We disagreed with Chhattisgarh High Court, but then later the Supreme Court, we'll come to that later, set aside the whole thing, and then they said it is okay. Under the Supreme Court exercised its powers under section 142 of the Article 142 of the Constitution. Then the sanctions under 141, we had mentioned briefly earlier. They're also in JM Financial Investment and Investment Consultancy versus ACIT. It was held that for AY 2015-16, if notice under 148 is issued beyond 4 years, then sanction of principal CIT is to be obtained and the Relaxation Act will not be applicable. On this point, I'm told our decision was the first in India. That's what Rahul says. And in some cases for AY 15-16, sanction of additional JCIT is taken, and in some cases, sanction of principal CIT was taken. In the case of JM Financial, everybody would know the assessee was in the business of investment and financing activities. For AY 2015-16, the assessment under 143(3) of the Act was completed on 12th December 2017. Notice under section 148 dated 31st March 21 of the Act was received by the assessee. Various objections were raised, all of which were rejected. The assessee challenged the rejection of the objections. One of the grounds for challenge was the assessment of the assessee was reopened after expiry of 4 years from the relevant assessment year, after obtaining approval from the additional commissioner instead of principal commissioner. The revenue contended that in view of the Taxation and Other Laws Relaxation of Certain Provisions Act 2020, like we said, the Relaxation Act, or TOLA, as many refer, limitation inter alia under provisions of section 151(1) and 151(2), which were originally expiring on 31st March 2020, stood extended to 31st March 2021. According to the income tax officer, the assessment year 2015-16, which falls under the category within 4 years as on 31st March 2020, the statutory approval for issuance of notice under 148 may be given by the range head as per the said provisions. Because he said that because of the Relaxation Act, that 4 years, within 4 years also got extended. The court held that since 4 years are expired at from the end of the relevant assessment year, as provided under 151(1), it is only the principal chief commissioner or principal commissioner who could have accorded the approval and not the additional commissioner of income tax. Accordingly, the notice issued under 148 with the approval of additional commissioner was quashed. In many cases, we also found that recorded reasons had factual errors which could be detected from the records. What surprised us was that the sanctioning authority was also giving sanctions without noticing the factual errors which went to the root of the matter. In Sagar Bullion Private Limited, we quashed the approval, the reopening, because the approval was granted even though the recorded reasons had factual errors. Here, what had happened was the assessment had been completed under 143(3). Assessment notice was issued after expiry of 4 years. In the recorded reasons, it was stated assessment was completed under 143(1), whereas the assessment was under 143(3). So assessee was in the nature of in the business of jewelry, whereas in the recorded reasons, it was stated failure to disclose salary. So the reassessment was quashed on the ground that sanction was merely given. I mean, these are the basic things which an officer should even look into before he forms. Because if such factual errors are there in the reason to believe, how can you say that the reason to believe was correctly arrived at? Then there was one interesting matter there were many, of course, under the Direct Tax Vivad Se Vishwas scheme at DTVSV. One of the matters which came to mind, which we felt was relevant, was in the case of Reliance Industries Limited versus Chief Commissioner of Income Tax, where petitioner was desirous of availing the benefit of DTVSV Act with respect to certain pending income tax litigations and filed an application under the DTVSV Act. It was rejected in view of the provisions of Section 9C, because under the DTVSV Act, many would know that all could file except those who were excluded. And under 9C, it provided that though again, if there are any prosecution instituted under the Prevention of Corruption Act, those people could not avail of the provisions of DTVSV Act. So that rejection was challenged on the ground that out of the 2 criminal cases pending, the first only an FIR, no prosecution had been instituted since only FIR had been registered and the matter had not proceeded further. And in the second proceeding where charge sheet was filed and cognizance was taken, even if convicted, petitioner would be convicted for offences under the IPC and not for offences punishable under the PC Act. Very ingenious argument. We're quite impressed with that. But the court rejected the objections, the petition, and it was held that the purpose and object of DTVSV Act is that it has been formulated for resolution of disputed tax and for matters connected therewith or incidental thereto. The DTVSV Act allows the eligible assessee to settle pending disputes on payment of the specified amount based on the percentage of the disputed tax that would otherwise be spent on long-drawn and vexatious litigation process. Court held that benefits granted by the DTVSV Act are by legislative policy not available to certain persons like those identified in Section 9C of the Act. And it shows that 9C was carved out with a definitive purpose and provided the list of persons to whom DTVSP Act will not apply. So therefore, the purpose, though it was a beneficial legislation, it was not available, we held, to the petitioner in that case. So we believe the matter was taken to the apex court, which rejected the same on 1st April 2022. Another interesting matter which I held, we heard, which was quite a challenge for us, was the authority of advance ruling. Abu Dhabi Investment Authority versus Authority for Advance Ruling. Here the SSE, that is ADIA, Abu Dhabi Investment Authority, is a public institution owned by and subject to the supervision of the Emirates of Abu Dhabi. It was a resident of UAE for the purpose of Article 4, subsection 2, Clause D of the India-UAE Double Taxation Avoidance Agreement, DTAA, and accordingly entitled to invoke the beneficial provisions of India-UAE DTAA for the purpose of determining its tax liability in India. The AR said that the deed of settlement formed by was rejected, so on the ground that the contribution made or proposed to be made, the tax benefit was not granted to ADIA. And it was held that Section 61 provides that any income arising to any person by virtue of revocable transfer shall be chargeable to tax as income of the transferor. The deed of settlement shows that there was a revocable transfer by settler, and any such income to the arising to the trustee should be chargeable in the hands of the SSE. Then we also said we went on that. Because we're running short of time. I think Mr. Ved, do we have till 10:40? We started 10 minutes late.
Yes, sir. No problem. We can do that.
Thank you. Thank you. And there was also a transfer. We said that transfer can be revocable transfer on its own merits without reference to Section 63. And Clause A of 63 merely extends the provisions of it. It was quite a very, it covered a lot of issues on who can be taxed. And I'll just skip some of that. Then the another thing, ground of defense that the AR had taken was, it was a foreign trust, and it's not covered under the definition of trust in terms of the Indian Trust Act. And we held that a foreign trust can also be treated as a trust under the Income Tax Act, as it appears even from the tax forms that are prescribed to be filed, where disclosure of details of trust require or seek for indicates that a foreign trust is a trust for the purpose of the Act. So the court also noted that there was no attempt whatsoever to reduce the tax liability by using the tax structure, because what was the fear was you use this tax structure to reduce liability. If the trust had, instead of the trust, if ADIA had directly invested, they would not have paid tax. So why would they want to do something? Because there was nothing to avoid tax. So when the provisions of the trustee provided that the SSE has right to reassume power over the entire income arising on the investments made by the trust in the portfolio companies, the entire income arising therefrom has to be, in terms of Section 61, to be assessed in the hands of SSE. That would mean the exemption under Article 24 of India-UAE DTA would be attracted. And we also held that in the facts of that case, SSE could assume the power, and hence contribution to the trust was a revocable transfer, thereby making the income arising to the trust taxable in the hands of the SSE. I would suggest, whoever has not had a chance, personally, I'm very happy with the way the judgment had come out. So we please read the whole thing, at least for academic interest. Then came the faceless assessment regime. With the number of writ petitions challenging faceless assessment orders was increasing at certain point of time, I'm afraid I'll be candid, pardon me for making this observation, that we did at times get a feeling, maybe we are not correct, that was anybody trying to deliberately scuttle the faceless system. Because there was, otherwise it was in no way many of those orders could be passed. It was perhaps it's a new thing, but it's only how the hearing or system should work. There was no new law being laid, but still nobody was following the procedure which was prescribed. There, the replies filed were not being considered. In Mantra Industries versus NFAC, that is the National Faceless whatever, petitioner had challenged notice assessment order passed under section 144 of the Act, along with notice of demand under 156 and penalty proceedings initiated under 270A of the Act. Court allowing the petition held that the order passed by revenue was an exact reproduction of draft assessment order without considering replies filed by petitioner and petitioner's request for personal hearing. The assessment order was set aside, and court held that it was passed without application of mind and was not in accordance with the procedure laid down under section 144B of the Act. It was also observed, if such orders are continued to be passed, substantial costs will be imposed on the concerned assessing officer, which would be recovered from his or her salary. And also department will be directed to place such judicial orders in the career records of such assessing officer. We had to do it because it came to such a level that every day there was a huge number of petitions being filed. But anyway, not that we have anything against anybody, as I said earlier. And I'm told that this matter, the revenue has carried it to the apex court, and a notice has been issued. Where in another matter, in Milestone Brandcom Private Limited, we imposed cost of 10,000 on the assessing officer to be paid to PM Care Fund for not granting personal hearing. We also ensured that the assessing officer who would, when we remanded the matter back, would be a different assessing officer, not the same person. People are seeking personal hearing, not being granted, just orders are being passed. And orders were being passed simply reproducing the draft assessment order. The draft assessment order, many a times the draft assessment order were in the nature of further queries raised. How could that be a draft assessment order? I mean, therefore we had, we got the feeling why it is being done. And in another matter, again, an affidavit was filed which did not correct. There were a lot of, though in the order we had said that it is not truthful, that there were the reply filed by the department had a lot of factual errors. Assessment order was passed on the ground that the SSE did not, that is Zeus Housing Company versus UI. The assessment order was passed on the ground that the SSE did not respond to notice and draft assessment order, whereas the fact was SSE had filed replies. A printout of the e-proceedings response acknowledgement form from the department was annexed, which confirmed the reply to the notice had been submitted, annexed to the petition. Therefore, it was obvious that respondent number 3 had not considered the reply, that is, the AO had not considered the reply filed by the SSE before passing the assessment order. The assessment order and the consequent demand notice issued under section 156 were quashed and set aside. Court observed that officers are not truthful in filing their affidavit and directed to circulate copy of the order to Commissioner of Income Tax, Judicial, Mumbai, and also to all commissioners of judicial in the country, and observed that a department be truthful and accept their mistakes instead of filing an incorrect affidavit. Errors do happen. All are human beings. If mistakes happen, mistakes do happen. People, we must be bold enough, candid, to say, yes, we made a mistake, we take back. And that should be the approach. Of course, I must also say in many such matters, the lawyers appearing for the revenue were bold and as true officers of the court told the court, yes, sir, we agree that this order could not have been passed. Please give us time to take instructions. And then they would say, quash the order, send it back, we would reconsider. That should be the spirit, and not file an affidavit without even reading the petition, because people should remember an affidavit is a statement on oath that you make to the court that what I'm stating herein is true, and I believe the same to be true. So when you could read the petition and find that even the draft, the affidavit does not contain the truth, then you must correct it. And then there was another matter where we had to also pass, we had imposed costs and pass some strictures. Then there was another issue where we came across was regarding judicial discipline. In Omega Investments and Properties Limited versus CIT, we held that tribunal cannot differ from earlier order of tribunal in assessee's own case and follow the order of tribunal in the case of another assessee. And if tribunal felt one bench felt that its coordinate bench was not correct, then it should, the judicial discipline requires that the matter is referred to the president to constitute a larger bench to decide the issue. And here that was not done. And one of the most another interesting matters which we were coming across, which were also not appreciated by us, is that appellate authorities and quasi-judicial officers do not follow the decision of higher appellate authorities on the ground that those orders are challenged in further appeal. If ITAT is held against the department, they would say, oh, that is not acceptable. We have challenged and we will continue to do what we have done. How can that be? So in Karanja Terminal and Logistic Private Limited, we followed the famous Supreme Court judgment of Union of India versus Kamalakshi Finance Corporation Limited. And if I recollect, I think Dr. Shriram had cited that judgment first time before us. Kamalakshi Finance Corporation. The commissioner under section 264 rejected the petition on the grounds that though the tribunal had deleted the addition made by the AO on account of interest earned from fixed deposit, the department had not accepted the decision of the tribunal and had filed an appeal before the High Court, and that various courts had held that interest earned under similar circumstances and facts to be revenue in nature and liable to tax. The court held, following Kamalakshi, that unless there was a stay by a competent court of the operation of the order of the tribunal, the principal commissioner should give effect to the order and pass an order in accordance with law. The order of the tribunal or the operation of the order had not been suspended. And so the order rejecting the SSC's petition under 264 was set aside and the matter was remanded for de novo consideration, saying, please consider the order of the ITAT. And then one of the biggest, we were aghast. The next point, I'm going a little fast, please. We were aghast considering the plight of SSCs, whether big or small, in obtaining legitimate refunds from the department. They were made to run from pillar to post and also do rigorous follow-up. We decided to render complete justice and expedite the legitimate refunds due to the SSC. We felt that inaction on the part of the revenue, not giving admitted refunds, was totally wrong and illegal. People should realize that, okay, so in one matter they said, oh, they are getting refund with interest. But whose money is used to pay interest? It's a public money. Every taxpayer in the country, their money is used to pay interest. Why should somebody earn interest when he need not be paid any interest? Because just because an officer did not process the refund application or for some reason it was not given. That was the point which we we took, and that 6% interest was also taxed. So therefore, and if for the period that the refund was the amount, the assessee may have to take working capital. He is paying interest to the bank at some obscene rate of interest. So the 6% minus the tax amount, say let's say 4% and 14 or 15%, the 10% was a loss to the assessee. So that should not be done. And we had directed that refund should be given in Vodafone Idea Limited versus Deputy CIT. We said no part of the refund can be withheld in relation to income tax demands which are either quashed by appellate authority or tribunal or stayed. And then in Tata Communications versus Union of India, the petitioner did not even receive any intimation under 143(1) of the Act for a refund from, no, also 143. I think there is, sorry. And then where there also we directed refund to be given within 2 weeks of receiving the order. Then adjustments under against refund, that is the under 245. In jet privilege, we held that assessing officer may, in lieu of payment of refund, set off amounts to be refunded or any part of that amount against some, if any, remaining payable under the Act by assessee to whom refund is due, but only after giving notice under 245, because this notice under section 245 was a mandatory provision. In many cases, notice were not even, the intimation was not even given to the assessee. So we held that such adjustment cannot be made and said the amount has to be paid back. And in Bharat Petroleum, the department was directed to grant refund with interest because there the assessee had paid the demand of 20% of tax in dispute. The assessing officer still adjusted the refund without giving mandatory intimation under 245. So court held that the assessing officer shall grant stay of demand where outstanding demand is disputed on petitioner paying 20% of disputed amount. Because once that 20% is deposited in the, while filing an appeal, there is an automatic stay. So once that is done, the petitioner, the assessee will not be an assessee in default, and therefore this amount cannot be adjusted. Then there were cases where we had granted 100% stay because cross-examining assessee, there were certain statements on which reliance was placed while passing the assessment order. But those statements, the assessee was not given an opportunity to cross-examine those persons. So we said that demand was not correct. Then in Perizad Zorabian Irani versus PCIT, court was issued with faced with the issue whether remuneration and interest from partnership firm will be gross receipt or turnover for purposes of tax audit. There was no direct precedent. A petitioner was an actress and had shown her professional income and also remuneration from 2 partnership firms in her return of income. The professional income being less than prescribed limit, petitioner had not obtained the tax audit report. So the assessing officer held that though the professional income was less than the prescribed limit for tax audit, remuneration received from 2 partnership firms being more than the prescribed limit, petitioner ought to have obtained tax audit report. And since it was not obtained, it was treated as invalid. And revision under 264 was also rejected. And the court held that the assessee, relying upon Anand Kumar of Madras, where the assessee did not have any turnover and receipts on account of remuneration and interest from the firms cannot be construed as gross receipts. So before my conclusions, Abhitan, relax. I'm concluding in 2 minutes. On account of my experience in the tax bench, both direct, now I'm doing indirect taxes. I truly appreciate the support that the bench receives from the representatives of the assessees, that is the lawyer, as well as department in solving complex issues of law. Based on my experience to reduce litigation and pendency, and consequently saving costs and for generation of income at the same time, I would like to make some suggestions. I'm sure the lawyers may not be very happy in my saying this. Whereas, so now let's deal with the income tax department. I would strongly urge and request that it is really taken seriously, that not to postpone the case till the end of the limitation period. What is observed is that after initial notice is issued and replies are received, a show cause notice for making addition is issued after a gap of few months, usually towards the end of the limitation period. Thus, AO in most cases is unable to even give sufficient period to comply with the show cause notice. This results in gross violation of principles of natural justice. Many petitions are filed on this ground, which can be avoided. Then there are occasions when faceless hearings, the personal hearings are not able to take place due to technical glitch with the in faceless regime. So the department should issue notice nevertheless to all the parties. Then the biggest problem which I found was the department counsels were not being given timely instructions. There seems to be, I'm sorry to say, a general apathy. A lot of delay we find in giving instructions or comments from the AO for preparing reply to the petition, because department should realize that more a petition is delayed, particularly where there is a state running against them, it is the revenue that suffers. So department should be more proactive and give very prompt instructions to file reply and go on with the matter. And income tax officers should be trained with a view to have human and judicious approach where by principles of natural justice are duly complied with. And this will go a long way in mitigation of litigation. There should be better communication between JAO and FAO, because there seems to be, even when orders are passed, it's not being shared and not communicated. We had to, in some cases, even issue contempt, threaten contempt for not following. And the another problem which I faced was the panel advocates change. So when old matters are listed, nobody appears because that old panel advocate has changed. So I would suggest the department, each commissionerate should have a nodal officer like a law officer, whose job would be only to keep track of all petitions. And like you have a tally in accounts, he should have a kind of a template where every matter's current status is getting uploaded. If it is listed today, there should be an entry. What happened today? What is the next date? And who is the lawyer? And if the panel changes, automatically the names of the lawyers should be changed by assigning the matter. Let's say Mr. X is the panel advocate. After 2 years, that lawyer is no more there in the panel. Department should promptly look into that and then assign the matters to different lawyers so there is continuity. And we had even in one matter directed the department to take such take steps in that regard. And as regards the SSC, junior lawyers must be given some training by their seniors in court craft and advocacy. But I must tell you, I was very happy with the juniors in appearing in the direct tax bench and indirect tax bench. And Mr. Shriram, who I see also may have something to feel on that. And they must be given more opportunity to appear in court, so that, because that's how the future grows. Unless the junior gets a chance to train, and I think we gave enough opportunity for juniors to open up and address the court without any fear. The only requirement was read the brief and come, don't just come there and stand. And the advocates should really, all clients may want to do what, let's go to the court, what do we do? Please give a dispassionate view and put litigation should always be the last resort. By that, you also help the court to bring down the pendency. Thank you very much.